Hi everyone, welcome back to Corporate Decoder. Today we're diving into a report from Morgan Stanley Direct Lending Fund. It's got a bit of everything from stock sales to some internal changes, but don't worry, we will break it down. Let's get started. First off, this is a Form 8K, which is basically a corporate breaking news report. Companies use it to tell investors about big events that could affect their stock. The date on this one is March 28, 2025. So who are we talking about? Morgan Stanley Direct Lending Fund based in New York. They're in the business of lending money directly to companies, and their stock is traded on the New York Stock Exchange under the ticker symbol MSDL. Now for the juicy bits. The company has made a deal to sell more shares of its stock. They're working with a bunch of companies called sales agents to sell up to $300 million worth of stock. That's a lot of money. They might sell these shares directly on the stock exchange or through deals with market makers. The sales agents, the companies helping Morgan Stanley Direct Lending Fund sell stock, get a commission of up to 1.5% of the money they bring in. So if they sell 100 million they bring in, so if they sell $100 million worth of stock, they could earn up to $1.5 million worth of stock. They could earn up to $1.5 million worth of stock. Another important change, they've increased the number of shares they're allowed to issue. They changed their rules to allow for more shares, from 101 million to 501 million to 501 million shares. This doesn't mean they're selling all those shares right away, but it gives them the option to do so in the future. This change to the number of authorized shares wasn't a spur-of-the-moment decision. The company had a meeting where shareholders voted on it, and they approved the increase. The votes, about 36 million voted in favor of increasing the authorized shares. About 8.5 million voted against, and about 1.5 million abstained, meaning they didn't vote either way. So it passed by a pretty wide margin. To recap the voting results, 36,239,861 votes were cast in favour, 8,557,457,747,747 Abin session to increase its authorized shares. And now what does all this mean? Let's break it down. Morgan Stanley Direct Lending Fund is essentially raising money by selling more stock. This could be for a few reasons. Maybe they want to make more loans, pay down debt, or invest in new opportunities. Increasing the number of authorized shares gives them flexibility to raise money when they need it. However, there are also potential downsides. Selling more stock can dilute the value of existing shares, meaning each share represents a smaller piece of the company. This could push the stock price down, at least in the short term. The company's success depends on how they use this new capital and how effectively they manage their business. One risk to consider is the overall economic climate. If the economy slows down, it could be harder for the companies they lend to pay back their loans. This could lead to losses for the fund and hurt its stock price. However, the company has been around for a while and is one of the largest lending funds, so we assume they know how to work with it. Overall, this report shows a company that's actively managing its capital and preparing for future growth. Whether it's a good investment depends on your own risk tolerance and belief in the company's strategy and their ability to navigate the economy. Thanks for watching. If you found this breakdown helpful, please give it a like, leave a comment and subscribe for more corporate deep dives.